Hi everyone, this is Bogdan, Nicoară, co-founder and CEO at Bright Spaces, and I'm glad that today we will start our video interview series for Bright Insights. And the first person that we want to talk to is Paul Clark, a very experienced person in the UK real estate market. And I would like to ask Paul to present himself as he feels best.
Hi there. Thanks a lot. It's good to be here. My name is Paul Clark. I've spent the last 12 or 13 years at the Crown Estate, where I've been the Chief Investment Officer and responsible for real estate investment strategy, asset allocation, transactions and development at the business. Prior to that, I was the Chief Surveyor at the Church Commissioners, which is a global pension scheme for the Church of England, and my experience is predominantly in UK real estate, but also as an investor in Europe and Asia.
Thank you, Paul. I believe the first question that is right now on everyone's lips is still regarding this situation that we are in, the pandemics. And how do you feel this affected the UK real estate market?
Well, I suppose the first thing to say is that in a way, everything and nothing has changed over the course of the last 6 months or so. And if we think back to how we viewed the world in January and February of this year, the big strategic moving parts around changing demographics and technology and behaviours are all still there. In many respects, they've just accelerated during the course of the pandemic. Perhaps the one that you would question is urbanisation and the extent to which that has been arrested for the time being, but perhaps we're going to see a different sort of urbanisation with more emphasis on suburbanisation for a while. And of course, alongside that, the first thing that happened to the UK real estate industry was that nothing happened. There were no investment transactions, no leasing deals. The market did, for a period, pretty much close down, although we are now beginning to see, both in UK and mainland Europe, a return of the investment market for prime real estate and some activity in leasing, but principally distribution, and not much wider than that at the moment.
Thank you. And regarding the main sub-industries, the office, industrial, retail, and residential, which do you think was the most affected by this period?
Well, again, if we think back to how we saw the world in January, February, the retail sector, for example, particularly in the UK, was already stressed. And the same applied to the restaurant subsector. Within that, we were already seeing business failures, rental growth was in reverse, and the lockdown that we experienced in the spring and early summer has only heightened that. And although we've seen quite a strong comeback over the second half of the summer, that's still a sector that has a lot to work through. But in many respects, as with a lot of things, the pandemic has accelerated changes that were happening anyway. So, for example, online shopping penetration in the UK went from about 20% pre-lockdown up to more like a third, and has subsequently fallen back a little bit. But let's say it comes to rest at something like 25%. You've already seen 3 or 4 years worth of additional penetration from internet retailing into physical retailing in the course of 3 or 4 months. And that's not untypical of what this pandemic has done. With offices, we still know that only a minority of office workers are back. This is not going to change in a few weeks or a few months. I think we're in for a very long haul in terms of people coming back to the office, and they'll only do that when employers and employees genuinely feel comfortable with all the aspects of returning to work, not just what happens in the office, but how people get there and back again. Logistics, already a favoured sector before the lockdown, even more so now, and I think we'll see last mile logistics, the importance of that only increasing. Residential as another winner out of this, as are some of the alternative sectors, and even in retail we can see that supermarkets and essential and convenient retailing has done relatively well, as of local high streets. And I would think that retail parks, for example, in the UK, will come out relatively well from this compared to other sectors in retail, because in effect they are both COVID and internet friendly, given that you get free parking, plenty of room to socially distance. The rents are generally lower than they are in city centres, and it works very well with click and collect. So there are going to be winners and losers out of all this.
Definitely. I would come back to the office sector, because here we have many subsectors that it seems they may be affected differently from this period. What do you feel about long-term leases versus short-term, co-working versus headquarters?
Well, I suppose at the risk of repeating myself, a lot of the trends we were already seeing over the last couple of years, for example, I think we will see that even prime office buildings, where traditionally developers and landlords have leased big floor plates for 5 or 10 years to blue chip operators, those buildings are going to change. They might look quite similar from the outside, but what goes on inside will be much more of a combination of long leases and shorter leases, of probably more circulation space and more services provided by landlords. That a lot of what the co-working operators have been doing will get incorporated into the traditional office sector, and there'll be much more of a mix of style of lease lengths and operational styles within buildings. And consequently, if you think of how what it means to be a property owner is changing, again, these are things that were happening anyway, but they were happening perhaps relatively modest pace, and suddenly it's so much more obvious how you need to behave to be a successful owner and operator of real estate. And in the office sector, there's no doubt that it will be necessary for owners to have a much more granular relationship with everyone who uses their buildings, not just 2 or 3 key senior people in an organization, but all the users. To do that, you need much better data that you're able to capture and interpret. And if you're going to make the most of that data, then of course you're going to need more sophisticated digital platforms that enable you to have two-way communication with a much broader range of people, hopefully everyone that's coming in and out of your building. And operators will use that to supply a broader range of bespoke services to all the users of their buildings. And that's something I think will now only accelerate, because it's so much more obvious how you need to behave. The other thing I think will happen is that the technology that we've used over the last 10 and 20 years increasingly to effectively and efficiently densify office use will be used to do the opposite. It will be used to efficiently de-densify offices, and offices will be used still for collaboration and for team building and for innovation and for meetings, but they will be less about rows of people sitting at desks.
As a follow-up question, and I believe this might be a painful one for the office, for the big office landlords, who will fill in the voids created by big companies that already announced they will keep most of their, let's say, IT members at home? And I'm asking this because I was just discussing the other day with some partners in the consultancy part of the industry, and they were saying that they see a trend in smaller companies which otherwise wouldn't approach a big office building, trying to get a small office in that building. Do you see that as a new opportunity for big office landlords, as you said, to be more granular, but also to look at a potential list of tenants that weren't on their radar before this?
Yeah, I think that's right. And I think it fits with what I said earlier around the greater fluidity that you should expect to see within office buildings in the coming years. It won't just be floor after floor of 10-year leases on market rents. There'll be some of that, but it'll be mixed in with floors that look more like co-working floors, with leases for shorter durations, almost certainly more circulation space, so perhaps less net lettable floor area, to use a traditional term, but with the lost income hopefully being made up through the broader range of services which you would expect the more sophisticated landlords to offer. But we're really talking about the prime end of the market with the best owners and occupiers. And whilst I don't think we'll have a sense of perspective on this moment for maybe 2 or 3 years, we won't really know what's happened until we get the chance to look back objectively. But at the moment, you can see that there are a whole range of really good owners that are thinking creatively about how to manage their customer relationships through this new world. And they can do it because in part, they've got the platform to do it. They've got the people and the systems, but also they've got the buildings that are good enough and flexible enough to behave in that way. And if there is a contraction, which is quite possible in demand for office space, you can see it coming out of the secondary buildings, the buildings with tight communal space, with just one small lift maybe, with a landlord that doesn't have a sophisticated operating platform. And it's there, I think, that there is the biggest risk. The winners will be the best owners with the best product, and it's going to be much more challenging for less specialist owners with secondary buildings, and that's where you can see the demand for space slipping away. And quite possibly, we don't yet know, there's a lot of talk about hub and spoke arrangements. Will occupiers go for a smaller city centre office and then think about having suburban offices around the place? And let's talk about, we don't yet know if that's how things will operate. I think at the moment it's safer to assume that there'll be a tighter concentration of occupiers in the best space in city centres once people feel comfortable about travelling.
Yep. I was wondering, what is your opinion regarding the way office landlords will look at how to attract the new clients, keeping in mind that now you will have a faster turnover, and that probably the same ways of attracting usually by representatives, by agents, will not be enough right now, especially discussing about smaller spaces. Smaller spaces means for an agent the same amount of work, but for a smaller commission. And how do you see this affecting the landlord and their way of attracting new tenants in the near future?
Well, I think that's interesting, and in many respects it's more of a problem for agents, I think, than owners, because owners will find the platforms to reach people, and you can already see owners insourcing more of the office leasing work than they might have done previously, particularly for smaller suites. And you know, that's true of most central London operators. They do a lot more work in-house than perhaps they would have done a few years ago for smaller suites. That gives them a broader range of routes to market, and I think they will end up using a lot of partners with platforms that can help them reach people through a level of digital connectivity which they've not been used to. And one of, I think, the big questions for the proptech sector will be this relationship between insourcing and outsourcing, because there's quite a traditional accepted relationship. Most businesses understand the extent to which they wish to have an in-house team and then use external advisors. And although there's not a single model for this, most of the big operators in terms of traditional asset management leasing understand where they want to draw the line between what they do in-house and where they use external advisors. When it comes to issues like data collection and organization and use and digital connectivity, you have to reinvent your platform. And owners need to decide what can they do in-house, because traditionally real estate businesses have not been very good at technology. How much do they want to gather in-house, and what sort of people do they want to hire to work in real estate businesses? Are they much more likely to be hiring people out of hospitality and with a data and digital background, for example, compared to traditional property people? And then that will lead them to decisions about how much of that platform they hold in-house and how much they need to use partners for specific functions that allow them that level of digital connectivity that they're going to need in the world they're moving into.
Great to hear you switching our discussion towards the digitization and the technology.
I thought that might be helpful.
Because this was my next question. What are, and this is a very subjective question, but I want to know, what are the latest technologies that you felt will shape the future of real estate? From, let's say, the research part to leasing to tenant relationship to divesting to everything regarding real estate.
Well, look, we're using one now, aren't we? We're using a video conferencing platform as we speak. And that's already this year had a tremendous impact on our demand for real estate. And I'm sure this doesn't apply to you, but I had not used one of these platforms before March of this year. And now I'm using them every day, multiple different platforms. So already you can see how technology is changing the way we think about our need for real estate. Once we get past this initial stage, I'd go back to what I said before. I think from an office perspective, in fact from all sectors' perspectives, the effective collection of data within the rules and being able to analyze and use that to understand how people use your real estate, and with that data to have the sort of digital platform that allows you to build up a level of connectivity with people we haven't seen previously, we're only just beginning to experience, I think will be absolutely key. And that is true whether you're in retail, residential, offices, alternative sectors. It's understanding that and using that then to develop a much more sophisticated operating platform. And all sectors, retail saw this first. That's had the most immediate, that's been the sector with the most immediate impact in terms of how technology has changed it. But offices now are not that far behind. You need a much more sophisticated operating platform, because those data and digital tools are only any good if you've then got the people that can build up the relationships that enable them to interpret all this information to add value to their customers. I think that's where the best real estate operators are moving. They're moving from a world in which we supplied a quantitative product. We just supplied space for people to use and we took a rent for it, to one where they have a qualitative relationship with customers, and real estate owners are part of the picture when it comes to adding to the productivity of their customers' business. And if you can show that your space is sufficiently efficient that you understand how to make it work for your customers really well, then you can be part of the process of improving the productivity of the businesses who occupy your space. And in doing so, you should be able to generate improved and sustainable income streams.
Thank you for this. Another thing I was thinking about, especially in the last 2 years, a lot of real estate players started to collaborate and to support small proptech startups. And I was wondering, what is your opinion about the future that you're talking about, the technologically enhanced future in the real estate? Will that be driven by the startups in proptech or by the big players that are already out there and probably they have a lot of more resources to spill in this new R&D perspective?
Well, that's a really good question, and I think it'll be easier to answer that in 2 or 3 years' time. But I suppose my observations on this would be that, and you will know better than me, but I think it's probably easier now, not easier, but there's more capital available to support startups in the proptech space than there was 2 or 3 years ago. And that was probably the case even before February and March, that over the course of the last couple of years, the sector as a whole has become much more aware of the extent to which it had fallen behind from a technology perspective and was in danger of being disintermediated. And specialist operators, some of them very large, coming in and doing the job that traditional real estate owners would normally have done. And that same applies to advisors as well. So it appears as though there's been more capital available for startups, which I think has been a good thing and galvanizing for the sector. And you're right, the options are for big real estate owners, what do they hold in-house and to what extent do they use partners to provide specific services into their portfolios? And the third dimension into this is the extent to which the big advisory community will also begin to in-house some of the tools they believe that their clients are going to need.
As some are already doing.
Yeah, and I think we know who those names are that are beginning to do that and have got their own offshoots that they're building up, and sensibly, and it's inevitable that will happen. But I think that it'll be a mix. Mostly, I sort of feel that genuine innovation will come from the startups. And then it's a question of whether or not they stay as independent businesses or their funding means they become absorbed into bigger entities. I think it's the advisors who are more likely to be able to take advantage of that more quickly than the owners. And then the other problem owners will have is if you're a smart tech person, you don't need to work in real estate and you don't need to work in a big business. And probably it'd be quite difficult for the big traditional owners to do a lot in-house. They'll be able to build up basic capabilities, but they will still continue to need specific services in the technology space from experts who only do that and can attract the skill and the talent and reward the skill and the talent to work on specific projects. So the question then is whether those are genuine standalone businesses or whether they begin to get absorbed into larger entities like the advisors who can run them either within their own brand or as an offshoot.
And again, you anticipated my last question, which was, do you feel that big real estate players are now creating their own research teams or venture arms looking for these startups? We saw some initiatives, and not only from the agents, from the consultancy companies, but also from the developers. And I was wondering if you see a trend in this, in having a digital approach, a small digital team inside the company just to look out for new, interesting potential startups.
Yes, I think they will all try to do that. you will see a common senior post in a big real estate business will be something like chief digital officer or chief technology officer. But I think they will be there to try and scan the horizons and take advantage of what's going on outside of the business. I think for the most part, they won't be able to build up the sort of innovation teams internally that will be big enough to source everything they want to do. Of course, they'll gradually absorb some things in-house, but mostly they'll be on the lookout for what's going on externally and how to use that for the benefit of the business. And we also know that a number of the major property companies and even unlisted owners of real estate also invest in the sort of venture capital platforms that give them access to portfolios of startups, so they can interact and work with the ones that they feel are most relevant to their business.
Yes, definitely. And because that was my last question, I want to end this by switching roles. If you have any question for me at the end of our interview.
Well, I suppose perhaps the most interesting question to ask you is how you scale up from your startup position to a broader platform, and to catch up with some of the things we've discussed previously. Should you concentrate on specific markets and specific sectors, or should you try to advance, for example, across a broader spectrum?
Definitely focus is very important for a startup. So looking at one market at a time is important in order to become the best in that market and to have a big market share. What we feel is also appropriate at this moment in time, when everyone wants to get as much value as they can from the, let's say, accelerated digitization of the real estate, is to try to have pilot projects in different markets, just to get a glimpse of how things are working in that market, and if we are ready to enter in the next period or not. And also to see all the difference between culture, between different approaches in that market. And regarding scalability, I think this is a thing that all startups, all early stage startups have to think about and to invest in. Definitely we need to take out the manual, the human interaction part in developing, in customizing the solution, and to have it as much automated as possible. This is what we are doing right now.